The Canadian real estate market is at a turning point, and if you're thinking about buying, selling, or investing in 2025, this could change everything. Interest rates are on the move, home prices are shifting, and a massive wave of mortgage renewals is about to hit millions of homeowners, forcing them into tough financial decisions. But it's not as simple as lower rates mean higher prices. There are serious risks that could blindside buyers, sellers, and investors alike. In today's video of January 2025's Edge Report, I'll walk you through exactly what's happening in the market, the biggest opportunities, and the major pitfalls you might want to avoid. Stay tuned because this video is important. Hey everyone, welcome back to the channel. And if this is your first time here, my name is Cameron Brioux and I'm a realtor in Moncton, New Brunswick. Every week, I break down real estate trends, market updates, or talk about real estate investing to help you navigate the ever-changing real estate landscape. My goal is to give you the most up-to-date and actionable insights so you can make informed real estate decisions. If you're serious about understanding the New Brunswick real estate market and want to know how these shifts affect your purchase or investment strategy, make sure to hit that like button and also subscribe to the channel. Oh, and if you're ready to take the next step here in New Brunswick, you can head down to the first link in the description and book a call with me. All right, let's dive into the Edge Report and break down what's really happening in the Canadian housing market right now. Starting with the biggest factor is interest rates. Interest rates have been one of the biggest talking points in real estate over the past year. And in January's Edge Report, it confirms that we're in for some major shifts. And with the Bank of Canada expected to cut rates by 0.25% this week, we could also see additional cuts in March or June, bringing the overnight rate down to 2.5% by the middle of the year. But here's where things get complicated. The potential for US tariff threats could throw the entire rate cut trajectory off course. If tariffs escalate, the Canadian economy could take a hit and the Bank of Canada might be forced to cut rates even further to stimulate growth. However, if inflation resurges or external pressures force policymakers to hold steady, we might not see as many rate cuts as the market is currently pricing in. So, what does that mean for buyers and sellers? If rates continue to drop, borrowing costs will decrease, making home ownership more affordable. But at the same time, economic uncertainty could impact employment and consumer confidence, slowing down the housing demand. The key takeaway here, while rate cuts sound like good news, the broader economic picture still is unpredictable. We need to watch the employment numbers closely before making any major real estate decision. While interest rates play a huge role in the housing market, we also have to look at supply and demand. According to the Edge Report, housing starts dropped by 13% in December, which means fewer new homes are being built. This is significant because supply levels directly impact affordability and the rental markets. On the flip side, we saw a record-breaking number of rental completions last year, with nearly 90,000 new purpose-built rental units hitting the market. This has led to cooling rent prices in major Canadian cities, which is great news for tenants, but it could create challenges for landlords and investors. If you're a buyer, this could be an opportunity to find deals in the pre-construction market where developers are now offering incentives to attract buyers. But if you're an investor, it's essential to do the math on the carrying costs, because even though the rent prices are softening, expenses like maintenance, fees, and insurance are still rising. One of the biggest concerns right now is the upcoming wave of mortgage renewals. The Edge Report highlights that 60% of all Canadian mortgages are set to renew in 2025 and 2026. And that means that millions of homeowners will be coming off of record low interest rates and facing significantly higher monthly payments. To put this into perspective, many borrowers who are locked in at 2% rates during 2020 and 2021 will now be renewing at closer to 5% or higher, leading to monthly payments that could increase up to 40%. And while some homeowners will be able to absorb this hit, others, they'll be forced to sell. increasing the housing inventory and potentially putting downward pressure on prices in certain markets. The real estate market in 2025 is shaping up to be a mixed bag, there's no question. On one hand, interest rates are expected to drop, which should make borrowing cheaper, but economic uncertainty and tariff threats could slow down the demand. Housing supply is tightening due to declining construction starts, yet the rental market is cooling as new inventory floods into the market. Meanwhile, a massive wave of mortgage renewals is about to put financial pressure on millions of homeowners. This could increase housing inventory and create more opportunities for buyers. At the same time, consumer confidence is slipping and more Canadians are falling behind on debt payments, which could impact overall market stability. The bottom line, and you may have heard me say this before, if you're a buyer, patience and strategy will be key in the coming months. If you're a seller, aggressive pricing and strong marketing will be more important now than ever. And if you're an investor, now is the time to reassess your portfolio and position yourself for opportunities as the market evolves. No matter where you stand, staying informed will be your greatest advantage. So just to recap, interest rates are likely dropping, but uncertainty remains. Housing supply is tightening, but demand is still weak. The mortgage renewal wave is coming, so prepare yourself potentially for higher payments if that is you. Home prices are stabilizing, but regional differences matter. Consumer confidence is shaky, so please exercise financial caution. If you found this video helpful, make sure to hit that subscribe button and share this with anybody thinking about buying or selling this year. And if you want to dive deeper into the New Brunswick market, you can head down to the first link in the description and book a call with me. Thanks for watching, and I will see you in the next video.